So Trulieve's Q1 numbers are out, and that's what we are going to cover in today's video. Before I begin, let's always remember that nothing in this video is investment advice, okay? And with that said, let's get started. So, in this video, I will show you Trulieve's Q1 numbers, okay? But I will also share with you some parts of their latest conference call that I think are important for us to better understand what's happening here. Okay, so that's what we're going to do today. So starting with what the company said about rescheduling, right? Which I think was by far the most important event that happened in this space over the last decade, right? In a long time. So that's what Trulieve said about rescheduling. Marijuana rescheduling is the first major policy shift in US history. Rescheduling accomplishes several historic goals. First, it acknowledges the medical value of cannabis, and reducing the stigma on cannabis frees patients to more readily access needed medicine. Second, it removes barriers to research, enabling critical research to provide information and tools for physicians to effectively treat patients. Finally, it eliminates the punitive tax burden of 280E. Removing the tax burden reduces financial pressure on state legal operators, opening up pathways for new investments and greater conversion into a regulated marketplace. We believe that rescheduling is the first major dominance of all, paving the way for broader reform efforts. So that's basically what Trulieve said about rescheduling. In fact, they talked much more about that in this conference call, but that's a good summary. But okay, let's now take a look at Trulieve's actual numbers, at Trulieve's Q1 results. So starting with revenue. Here, revenue. So as we can see here, revenue has actually declined, going from 297 million in the first quarter of 2025 to the current 286 million, right? So revenue declined. Revenue went down 3.7%. Now the question is, why did that happen? Why did revenue go down, right? So revenue went down because of this. As Trulieve's CFO tells us here, first quarter revenue was 287 million, in line with guidance. New store openings, adult use momentum in Ohio, and wholesale growth were offset by ongoing pricing pressure and softer consumer wallet trends. Now, what does that mean? That means that, yes, Trulieve is opening new stores, more people seem to be using cannabis, however, the company is facing some pricing pressure because of competition. And, as they say here, people seem to be spending less. Softer consumer wallet trends, right? So that's basically why revenue went down. Now, if that's the case, should we be worried about Trulieve not growing in the long run? Well, I don't think so. Yes, I think Trulieve will keep facing pricing pressures. However, I think that over the long run, Trulieve should continue growing, especially since the company is expanding, for example, to Texas. Here's where they say that. In Texas, we began our initial investment, breaking ground on our production campus. Pending regulatory approvals, we plan to quickly launch production and retail operations to serve patients across the Lone Star State. Alongside expansion within our existing markets, we are actively evaluating potential acquisition opportunities. So as we can see here, they're now expanding to Texas, and they're also evaluating acquisition opportunities, as they say here. So I think Trulieve will continue to expand, and that's why I believe revenue will continue to grow, even with the pricing pressure factor. For example, as they say here, Texas is a very large market, which we believe can be the size or potentially even bigger than the Florida market. So who knows? Maybe Trulieve's revenue could double in the long run, right? In any case, yes, revenue has declined. However, I think Trulieve should continue growing. Now, moving on, talking now about Trulieve's gross margin, which came at 59.3%, which is excellent, okay? However, gross margin actually went down when compared to the first quarter of 2025. As we see here, gross margin went from 61.5% to the current 59.3%. Not a huge drop, but still, it's a drop, right? However, with that said, a 59% gross margin is still excellent. And also, Trulieve's gross margin is actually much better than its peers. For example, look at Trulieve's gross margin at 49.2%, right? Or look at Green Thumb Industries at 47.8%. So yeah, Trulieve has a much better gross margin than its peers. And that's actually why I decided to invest in Trulieve. Trulieve was my cannabis sector stock pick because of its margins, because of its efficiency. Moving on, so even though we saw revenue and gross margin going down, still Trulieve delivered an excellent operating margin, as we can see here, of 12.3%, much better than the margin they delivered in the last quarter of 2025, and also better than here. So a very positive point. And that happened mainly because Trulieve selling general and administrative expenses went down. As we can see here, if in the first quarter of 2025, SG&A was consuming almost 40% of Trulieve's revenue, now this number dropped to 36.6%, improving Trulieve's overall efficiency. So yeah, operating margin went down. And finally, Trulieve delivered a net profit. Now pay attention to this, because this was the first positive quarter in terms of net profit, right? In a long time. Maybe in the company's history. I don't know. But at least since September 2023. So yeah, huge victory for Trulieve. Finally, a net profit. As we can see here, Trulieve's net margin came at 0.8%. That's not a huge margin, right? However, that's a start. And that was possible because Trulieve is paying less taxes. As we can see here, this quarter, only 7.6% of Trulieve's revenue went to pay taxes, right? Against 16.3% in the fourth quarter of 2025 and against 17.6% in the first quarter of 2025. Now, why is Trulieve paying less taxes? Because Trulieve is not under Section 280E anymore. As they tell us here, following the reclassification of medical marijuana, the Treasury Department announced that state-licensed medical marijuana businesses are able to deduct ordinary expenses as medical marijuana is no longer subject to the punitive 280E tax burden. This change applies to the current tax year and is reflected in our first quarter results. So the rescheduling of cannabis and the removal of Section 280E tax burden were essential for Trulieve to finally deliver a net profit. The end of Section 280E also has another very important effect on Trulieve. You see, Trulieve is fighting the government, arguing that the high taxes imposed under Section 280E should not have to be paid. So while this battle is ongoing, the company is setting aside, is provisioning this money in case it loses and is required to pay all of those Section 280E taxes. And this provision is what the company calls uncertain tax position. Here, balance sheet uncertain tax position liability was $696 million at March 31, 2026, with $656 million related to this tax challenge. So Trulieve is provisioning this money on their balance sheet under liabilities. However, if the company doesn't have to pay these taxes, that means that this entire provision would disappear. In other words, Trulieve's balance sheet could massively improve, and of course this could have a very strong effect on Trulieve stock. Now, I don't know if my explanation was clear. Besides, please correct me if I'm wrong here in my understanding of Trulieve's tax position, but I think I'm understanding the situation correctly. Trulieve has indeed a very large tax provision, and if it's decided that Trulieve doesn't have to pay that anymore, well then, I think this liability could simply go away. And that would actually be interesting because that would generate a lot of tax gains. So the net income would be huge. In any case, my point is, we also have this catalyst here that could massively clean Trulieve's balance sheet. Now finally, to close this video, Trulieve ended the quarter with a net debt position of $277 million, okay? However, let's remember that the company generated $277 million in operating cash flow over the last 12 months, right? So yeah, they have some debt. However, they can easily pay that. But anyway, let's now take a look at Trulieve's cash generation. So, in the first quarter, Trulieve delivered $55.7 million in operating cash flow. And since their capex stood at $13.5 million, that means that Trulieve delivered $42.2 million in free cash flow. Now, considering the company posted $287 million in revenue in the first quarter, that means that Trulieve's free cash flow margin was 14.7%. Well, that's excellent if you ask me. So these were the main highlights of Trulieve's Q1 numbers. Now, to finally close this video, right? I also need to cover this point here regarding uplisting. As we read here, given all of these changes, we are actively exploring options for Trulieve to uplist to a major US exchange and address the outstanding uncertain tax position, which we've already talked about, right? But as we read here, we could see an uplisting, and that would be excellent for us investors, right? Because the truth is that to this day, very few people can access this company, can buy this company, right? So if Trulieve uplists to a major stock exchange, that would certainly bring a lot of new investors. So I really think we could see much higher prices when the public finally arrives. And that includes a lot of hedge funds, that includes a lot of people. So if we indeed see an uplisting happening, well then, that could be a very important event for the stock. Anyway, these were Trulieve's Q1 numbers highlights. Okay? And well, that's it for today, and see you next time.